Hey everyone, hey, it's Brian Neff here with Stop Being Sold. Hope everyone's doing well today. In today's video, I'm going to cover how to choose your 401k investment options because it's such a common question I get asked is, look, I got this big old sheet of all these different investments. I don't know what to do with it. And today's video, we're going to cover that for you of how to start choosing some 401k investment options. So if you guys like this video, make sure you hit that like button and subscribe to our channel to get more videos like this. If you got questions, ask it down below this video in the comment section, and we'll get Michelle and I try to get you some videos made on them subjects. So anyways, today, let's get started. I found this Southwest Airlines 401k plan statement this year that shows their investment options. So we use this one as an example because there was a lot of different options in here. So this looks very similar to what you see in most of your 401k plans. So it makes a good representative of what's out there. So let's take a look at this. You're going to get this big old sheet here. It's a couple pages long of all these numbers and this, that, and the other. So today we're going to cover that into detail to just give you some idea of what you're actually reading and then help you choose some different investment options. So let's take a look at this. Let's start with, they have different investment options. You see across this blue ticker here, you've got fees, expense ratio, inception dates, returns, as of the month, returns as of the quarter, and then calendar year returns. So they got a good job explaining all this for you. And it's funny because at the top of this one, under asset allocation, you guys get to see these ones all the time. I'm going to highlight as I'm speaking about it. There's 2035, 2015, 2020, 2025, 2030. All these are our target date funds. This one here is the Vanguard Target Retire 2035. So this is for if your birth date shows that you're going to retire roughly age 65 to 67 in 2035, this is the one that most likely you'll see that they automatically enroll you into when you first start your plan. This is very common. That doesn't mean you have to stick with it. Your goal is to find out what's the best one that meets your risk tolerance and your objectives moving forward. So let's take a look at this across the board. We'll follow this. The gross expense ratio on almost all the target date funds of Vanguard are 0.04%. This one here has been around since 2015, so it's got a little track history here. This is their returns ending for this statement here. So then 1 month it was down 2.29%. Year to date was down 6%. But the 1 year return on it was average 4.75. The average return over the last 3 years, 11.19. And the average 5 year, 9.77. But since inception, since the 10-year inception day, 9.54 has been the average on that. That's not too bad, folks, for a nice, safe return for you, right? So then you'll see the other ones here, different ages and different brackets. Well, look at this one, the 2015 trust. Well, that was 7 years ago, right? The average return on this one since inception is negative 3%. So this most likely is not something you'll be looking into. But look at these other ones too, the 2065. It hasn't been around that long. See all these that they just started with here are 2021s. And that's why it's showing negative returns because it's been down this whole year. So be careful on this. Let's go down to, let's look at a different asset class, which is international funds. You got the American Funds Euro-Pacific Growth Fund here. You see the expense ratio is much higher on these here. As a matter of fact, over almost 12 times higher than the target date fund one up above. And if we go and look at the performance of it, it's been around since 2009. Since inception, the 10-year since inception portfolio has only averaged 7.42%. So that 7.42% is less than that target date fund of 9.54, and you're paying almost 12 times the amount in fees. This is the kind of stuff you want to look for when you're building your portfolio. So then even the Vanguard Institutional Total Stock Market Index Trust Fund was 0.06, so slightly higher fees. Been around since 2019, so it's only been around for 3 years now, and it's still only 7.59 return in that period. Next asset class, you'll see a small cap funds. This is the only one they have is this one here, the FIAM small cap core class. 0.62 ratio. Whoa, that is 15, a little over 15 times the amount of fees that you're paying up here. And look at the return of that Vanguard 2035 fund, 9.54. But guess what? Almost 4% higher in the 10-year history of this, or in the lifetime inception history, 13.19% rate of return. Okay, so would you pay higher fees annually to get, would you pay 0.6 in fees to get 4% higher? That's a pretty nice trade-off there. So they don't mean you, and never put everything into one, even though they automatically enroll us into a target date fund today with 100% of our funds. You need to diversify a little bit here. So now let's take a look at the mid-cap funds. Mid-cap, again, Vanguard Institutional Extended Market Index Trust Fund, low ratio, right? It's been around since 2019, so it's only been around 3 years, but look since inception, 15.66, almost 6% higher than that target date fund. Hasn't been around as long. Fees are the same. So this is how you compare with different options, okay? Now, let's go back into large cap funds. Large cap are the bigger companies, the well-established companies, been there for a while. That don't mean that they're better companies and will perform better for you at any given time, just saying that they're larger cap companies, meaning they've been around longer. Okay, let's look at this common one we start to see a lot, these top two, Dodge and Cox Stock Fund and Harbor Capital Appreciation, and then of course the Vanguard Institutional 500 Index, which tracks the S&P 500. Okay, ratios, the Vanguard's 0.01, literally no fees inside this thing. I mean, it's 0.01 is, minimal fees. Okay. Average 13.97% since inception. That was 2018 when it came about. But look right above it at the Harbor Capital. Fees, 0.71. Net expense ratio was 0.65, but 16% average return since 1987. Nice long-term play here. Yes, it costs you more than an index fund. Remember, you keep hearing, oh, just give me an index fund. Give me an index fund. Well, let's put it this way. Look at the difference. Yes, you're going to pay 0.65 total fees, net expense ratio over the Vanguard Institutional S&P 500 Index, but you're making 2.4% more on average. Okay. It's a little bit of a trade-off for a little slightly higher returns. Pay a little bit more in fees, get a little higher returns. The Dodge and Cox Stock Fund, again, another one, large cap, 14.36 average return since 1965. These things have very good track record of performance. This is the kind of stuff you look for when you're building your portfolio. So then of course, you'll always see bond funds inside your asset allocation mix. Here's the Vanguard Institutional Total Bond Fund Market, short-term bond fund, and then a core bond series. So if we look at them, the Vanguard, of course, the lowest expense ratio, 0.03 and 0.06 on these two. The average returns, this is a newer one, since 2019 has been 1.13%. And since 2012 on the short-term inflation protection, 1.81% since 2012. So it's been around for the 10-year history. But at the same time, if you go down here and you're looking at something safe and stable, they got a stable value fund. Yes, it's got a little higher fees. And yes, it has performed better. And this is a longer term one since 2007. So here's what we're looking at, folks. This is a normal sheet that you will see as far as your investment options. You're not mandated to stick with the one that's automatically enrolled like the target date fund. Do your research on each one of these and we'll look and see what's available inside here. This is how we analyze it as an advisor, looking at your portfolio. Look, I'm looking for long-term. If you're a long-term investor, yes, we're looking for long-term opportunities for you in these types of portfolios. So make sure if you like this video, if you want to see more videos like this, that you hit that subscribe button, ask any questions. If you got a statement you want to do a review with, drop it down below. Maybe we'll look at that for you also. We won't give investment advice on there because there's not a contractual relationship, but our goal is to educate you on what you actually have. So how's that? So you guys have a wonderful day. Thanks for watching our video today. Make sure you hit that subscribe button and we'll talk to you guys soon.